What's up everyone, it's Scotty with Money Investing. In this video we are going to be talking about Palantir, ticker symbol PLTR. They are going to be reporting earnings on Monday after the markets close. So I'm going to break down everything you need to know about this company. We're going to talk about the revenues, the earnings, the balance sheet, the cash flow, the customer growth, the revenue growth. Everything is going to be discussed, and not to mention the intrinsic value. Yes, we're going to calculate the intrinsic value for this business as well, because Palantir made a huge promise to us in Q4 that they are going to actually achieve profitability this year. So I am keeping my fingers crossed, and I'm expecting Palantir to report some profitability in this year in 2023. So we're going to break it all down in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us and our money investing community. We've got a little bit over 3,700 members, and of course, you get access to all the binds alerts, options alerts, trade ideas. Everything's going to be included, as well as the private live streams. We do them 3 days a week, Monday, Wednesday, Friday, and of course, other benefits as well. So link's going to be down below, and the first week of the month is the best time to join. So let's just dive right into it. This is going to be the expectation. So the consensus EPS is 4 cents per share versus 2 cents per share same time last year. So that is going to theoretically be a 100% increase year over year. And revenue estimate is just over 505, close to $506 million at the moment. And in the last 3 months, the EPS estimates have been 4 upward revisions and 3 downward. And Palantir over the last 2 years has pretty much been a hit or a miss. So 50% of the times they've beaten revenue estimates, and 50% of the times they've beaten EPS estimates, and they've beaten revenue estimates 100% of the time. So they've got a perfect record in beating revenue, but it's been kind of like a hit or miss when it comes to EPS. Now, this right here is going to be that business update for entire fiscal year 2022. Now, before we get any further, I want to point out that Palantir, in my opinion, as I mentioned in one of my live streams as well, has not done such a great job in kind of telling their story, right? They always come across, at least in my opinion, every time I've heard Alex Karp talk about the business, unfortunately, they come across as being very arrogant, right? They kind of think that they are the best hotshot in the industry, and they're kind of like untouchable, and they're the best in the business, and they're doing something that's incredibly well, and that all might well be true, but it's just, when they talk about their earnings, when they talk about their business, they kind of come across as, kind of like not humble people, so to speak, right? Not a humble business, so to speak. So that is something that I think needs to change from a marketing standpoint. I think Palantir needs to do a better job in kind of telling their story and what exactly are they, in the business of doing, because we've had this issue in the past where Palantir's business was so complex, and it still is, that they had to hire marketing people, they had to hire salespeople to really bring it down, to really dumb it down, so to speak, so that other businesses can really appreciate what Palantir is offering, right? And they can come on board as customers, and even investors can really understand what the business is all about, because it's a B2B business, right? So they're not targeting consumers. They're basically business to business, and that's a much harder, more difficult, more challenging business to grow, right? Because there's only so many businesses in the world. Of course, there's over 8 billion people, but there's not 8 billion businesses. So that's always been an issue for Palantir. And we also had Palantir kind of forego their estimates of growing 40-50%. In fact, they're bringing back down a little bit in terms of revenue growth. So we are going through some challenging times, but at the same time, they do offer solutions that can be solved for some of the most complex technological issues out there. So Palantir definitely at the forefront of artificial intelligence, kind of condensing all that data, making sense of that data, and really offering those solutions. But they just need to be able to kind of tell that story, right? We know it, you know it, I know it, but investors and customers, everybody needs to know what Palantir is all about. And of course, we got some financial issues with respect to their share dilution and the stock-based comp. We'll talk about that later in the video as well. But this right here was the fourth quarter 2022 highlights. So they achieved GAAP net income profitability for the first time in the company's history. You can't see, but I have tears coming out of my eyes. GAAP earnings per share was about 1 cent per share. So finally, a profitable business on our hands. And they also guided for GAAP net income, which I'll break down later in the video. Revenue growth was about 18% year over year to over $500 million in Q4 of 2022. And the U.S. government revenue, specifically for the government section of the United States, up 22% to almost $225 million. and adjusted operating margins was 22%, and 261 deals closed, up 20% year over year from 217. This right here was the entire fiscal year 2022. So U.S. businesses growing 32% year over year to 1.2 billion. U.S. commercial revenue up 67% year over year. And revenue overall was up 24%, growing to over $1.9 billion. So if we do some very, very quick math here, Palantir right now trading at $15.5 billion. So $15.5 billion divided by 1.9, it's trading at just a little bit over 8 times sales on a trailing basis. That's probably one of the only metrics that we can look at because the company does not have trailing 12 basis, profitable EPS, or I believe free cash flow as well. Customer count increased to 367. That's the total number. That's up 55% year over year from 237. And 976 deals closed, up 61% year over year from 605. And adjusted operating margin of 22% in the entire year. So again, 7% growth in U.S. commercial revenue. U.S. government revenue is up 22%. So this business definitely is slowing down a little bit, and commercials kind of really driving that growth. But it is also a smaller base, so it's going to take a little bit longer for this business to really have a much bigger impact on the overall business. And this right here, government revenue growth 19%, commercial revenue growth 29% for the company as a whole, right? So this is just the U.S. segment, and this is as a whole for the company, where we are seeing, of course, commercial grow much faster, and it's really catching up to the overall government revenue growth business as well. This right here is the entire fiscal year 2022 revenue, 1.9 billion, up 24%. So not a bad year, right? So still pretty decent growth here for the company. And total customer count also at 367. This right here is going to be that concentration of the deals being done. 55 deals of at least $1 million or more, 11 of which were at least $5 million or more, and only 5 that were over $10 million. And that's really good because it's not concentrated into a handful of deals. It's not like a majority of the revenue is coming from just a handful of companies. It's a little bit more diversified, and that's really what we want because we don't want to have the risk of those 5 deals kind of getting pulled out and the revenue declining significantly. This right here, one of my favorite slides is that they have pretty much over $2.6 billion of cash and literally no debt, and that's probably because they have been issuing a lot of shares. So they have been able to raise a lot of capital from the market. But $2.6 billion in itself is useless, right? If they don't put it to better use, if they don't actually invest this back into the business and generate that high return on capital or high return on assets, it's useless, right? It's literally going to be sitting there earning nothing, right? Because inflation is really high, and it's only useful if they actually do something with that cash. And they've got the liberty because they have no debt, right? So they've got literally all cash, no debt. They need to invest this. They need to literally either invest it or buy back shares. Do something with the cash because $2.6 billion is a big amount for a company that's trading at $15 billion market cap, right? We've got 7 times the cash amount the valuation is trading at. They need to put it to better use, like immediately. If I don't see this cash amount going down this quarter, I'm going to be very, very furious, so to speak. Furious would be an understatement because they need to invest it. Now, first quarter 23, this is what the guidance was, $503 to $507 million, with adjusted income from operations between $91 and $95 million. And for the full year 2023, they're expecting $2.18 to $2.23 billion. That is not a lot of growth because if you do the math, 2.2 divided by 1.9, we're looking at a 15.7, almost 16% growth, which is dramatically lower, but they are expecting GAAP net income. So fingers crossed, folks, fingers crossed. This right here is going to be that EPS estimates from analysts. So 20 cents growing all the way up to 47 cents per share by the year 2027. Margins are good, but they are going to be doing some cost cuts. So again, the expectation would be for all these to turn profitable and positive by the end of this year. Valuation right now, as I went over, 7 to 8 times sales at the moment, with over 46 times cash flow on a forward basis. So definitely way too high. And price to earnings on a non-GAAP basis running at a little bit over 36 at the moment. Because if the price right now is at roughly around 741, so we do the math, 741 divided by 20 cents, we're trading at 37 times forward earnings, and the earnings growth is definitely going to be a little bit higher for this year and for the years to come because this company is just turning the corner towards profitability. So this right here is the growth calculation. So analysts right now are expecting earnings per share for Palantir to go from 20 cents to over 47 cents. That's going to be a growth of just under 24% for the next 4 years, right? 4-year growth rate is about 23.8%. So when we are doing our analysis, let's just go with 20% just to be on the safe side, be reasonable, that Palantir is able to grow their earnings per share or net income really by 20%. Now, P multiple, I'm going to keep that consistent. Or let's just go with 25. It's a software business. Deserves a little bit of a higher P multiple. So we're going to keep that PEG ratio 1.25. 12% discount rate, 10% margin of safety, and share dilution. That's going to be a bit of a tricky part because they have consistently been issuing a lot of shares. If you come over to what Palantir's share count really looks like, it is going to be something like this, where they have gone from 1.7 billion to over 2.1 billion, and over the last couple of years they have really just been stagnant. So I'm going to assume maybe like 1% share dilution here in the last, well, they haven't really seen a huge amount, but they've definitely seen a lot of stock-based comp as opposed to share dilution. So let's just go with about 1%, 1 to 2% share dilution every single year, and we come down to a fair value of about 579, and right now it's trading at 740, which means about a 20 to 22% downside needed for Palantir to be trading at a potential intrinsic value consisting of about a 20% growth in earnings and a 25 times P multiple. So it's going to be closer to, I would say, on the high end, it's going to be closer to $6, right? So we've got that flexibility range, plus minus 5%. So $6 is really going to put us roughly around here at this support at 595. So that's going to be an intrinsic value where, if Palantir turns profitable, it starts to make a lot of sense because this company can't go bankrupt, right? This company can't go under unless they really screw up over the next couple of years. They've got plenty of cash with literally no debt, so they've got no financial obligations. All they really need to focus on is grow the business, execute on the business, and turn profitable. That's all they need to focus on really at this moment. And if they can do that, I think the business at least deserves some value. And I think that value is going to be roughly around $5.50 to $6. And you can see that P multiple will eventually roll over from 37 down to 28, then 30, then 29, then 27, 26, and then 25 eventually, if the growth rate can be sustainable at 20%. So let me know your thoughts down in the comment section below for Palantir. Unfortunately, I am stupid and I do own this company a little bit, and a very, very small amount, small percentage allocation, and I am underwater at the moment. So I may consider dollar cost averaging a little bit more if on earnings, the earnings are good and they are providing some good guidance and the stock sells off, right? If we do see that scenario, I could see myself maybe dollar cost averaging a little bit more, considering that there's no bankruptcy risk at this time and the growth rate needs to be what's going to drive the stock moving forward. And of course, I mentioned the execution and the profitability as well. So support level is going to stay put at $6. That's the level that I'm really watching right now with a resistance, very, very strong resistance at 870, 895. This right here is going to be that level to watch for Palantir, all the way up to 1184 to as much as $12. We have struggled at that level for Palantir as well. So those are going to be some resistance levels to watch for this company moving forward. Hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.